It's an important milestone in the growth and the maturation of the industry. The crypto industry has been plagued by inexperienced entrepreneurs like Sam, unreliable custodians like FTX, incompetent creditors, a dozen went bankrupt in the last year or two, unscrupulous promoters, and their failure is a necessary rite of passage for an industry that's going to lead to a new, more stable, more scalable ecosystem that'll be based on Bitcoin. Public companies like Block, MicroStrategy, Marathon, a dozen Bitcoin miners that are public, institutional money managers like Fidelity and BlackRock, and regulated banks when they eventually become custodians. The offshore crypto exchanges, the stable coins, the crypto tokens, the DeFi projects, they're going to shrink, fade into the background, and decouple from mainstream and institutional digital assets marketplace that'll be based on Bitcoin. I think it's critical for there to be a spot ETF for mainstream retail investors and mainstream institutional investors to participate. So it's going to lay a base layer that's going to allow large amounts of capital to flow into the industry. MicroStrategy is a special investment vehicle for Bitcoin long bulls. We're different from an ETF because we don't charge a fee. We can use intelligent leverage. We borrowed $2.2 billion at 1.6% interest to buy Bitcoin. And we can generate a tax-deferred Bitcoin premium either by using cash purchases or by capital markets activity. So we're not for everybody, and in sovereign wealth funds that want to buy $50 billion worth of Bitcoin can't fit into the MicroStrategy capital structure. But if you want leverage and this tax-deferred yield and no fee, then we're an interesting alternative for people in the space. I think it's going to help everybody in the space. They're going to accelerate education efforts and adoption. Already you can see Fidelity analysts are making a huge impact on the digital asset space. So as you see Wall Street analysts from all these ETF firms and you see their education and marketing efforts come into the space, and as they provide the rails for traditional institutional investors and endowments and the like to engage, they're going to expand the entire ecosystem. But they're not an operating company. They can't take on leverage. They can't not charge a fee. I mean, we literally don't charge a fee. And they can't engage in cash purchases with operating income like we can in order to generate that tax-deferred Bitcoin premium.
Bitcoin is grabbing the headlines, and it's got folks pretty excited. Many analysts are feeling pretty bullish about its future, and here's why. First up, there's a lot of talk about a Bitcoin ETF on the horizon. This could be a game changer connecting traditional finance with the crypto world. Then in April, we've got the Bitcoin halving. This event historically leads to significant price increases. Less Bitcoin mined means less supply, and that often leads to higher prices. On top of that, the Federal Reserve might be hitting the brakes on interest rate hikes. When the Fed eases off, investors tend to take more risks, and Bitcoin could be a beneficiary. When we look at the charts, there's a pattern called a bull flag. It suggests a potential price breakout. But don't forget, we've got support levels in place to catch Bitcoin if it stumbles. Now, in a surprising twist, former President Donald Trump is seeing his wealth grow. His crypto portfolio, including ETH and other tokens, got a boost from a Bitcoin rally. His real estate ventures in Florida are also booming, and his golf courses are making more money than ever. But that's not all. There's an interesting theory floating around about a connection between U.S. Treasury auctions and Bitcoin's price movements. If these auctions do well, Bitcoin's price tends to go up. And why does this matter? Well, it's tied to the possibility of a Bitcoin ETF getting approved. If that happens, big players in the financial world might jump into Bitcoin, and that could be a game changer for the crypto market. So there's a lot happening in the world of crypto and finance. Exciting times indeed. Let's continue our enlightening discussion with Michael Saylor.
Well, I think we've reached a nice point, but when Bitcoin passed $100,000 to $200,000, maybe it'll trade from $250,000 down to $175,000, and people are going to be screaming the end again. Bitcoin is compounding at 40 to 50% annualized growth rate for the past 3.25 years since MicroStrategy got into the space, with a lot of volatility. I think an analyst, Timmer from Fidelity, pointed out it is got the highest volatility of any asset, but it's also got the greatest return. And so, as I've said in the past, volatility is vitality. I'd rather have the volatility and the performance than get rid of the volatility. Gold's not volatile, but it's also down 1% in 3.25 years. So that's not what we're looking for. During this crypto meltdown, the crypto bros offshore and the leveraged hedge funds, they exited the space. They were all bankrupted for the most part. Right now, the natural buyers in the space are Bitcoin hodlers, the maximalists, the people that are sweeping their incremental cash flows into Bitcoin. It's almost impossible, very difficult for mainstream investors and mainstream retail to buy Bitcoin because there are just very few on-ramps. So the natural sellers are the miners, the natural buyers are the hodlers. The trading volume has diminished quite a bit. This is the lull before the storm. Once we get these ETFs in place, that will open up the gateway for mainstream retail and mainstream institutional capital to flow. And the halving in April is going to cut the available supply in half, and it's going to eliminate half of the natural selling. So this next 4-month period is very pivotal to the asset class. We have raised more than $1 billion in the past via ATM offerings, and whenever we did it, it was accretive to our shareholders. This $600 million vehicle will allow us to engage in more capital markets activity. As we're selling stock at a premium and then buying the underlying Bitcoin, we're capturing a tax-deferred Bitcoin premium for our common stock shareholders. So we're very thoughtful about when we do that and how we do that. And sometimes we'll do it, sometimes we won't. It depends on market conditions and where everything trades.
Hong Kong is examining allowing the launch of spot cryptocurrency exchange-traded funds, ETFs, given that the risks of these instruments are addressed. In a recent interview, Julia Leong, CEO of the Hong Kong Securities and Exchange Commission, stated that the focus of the organization's approach was consistent regardless of the asset. The U.S. Securities and Exchange Commission's former head of Internet Enforcement has predicted a big win for the SEC in the lawsuit involving Terraform Labs. The ex-SEC official also expects District Judge Jed Rakoff to keep projecting the ruling by District Judge Annalisa Torres regarding Ripple and XRP. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.